Good day. Earlier this week, cracks had already started to appear in the newly agreed austerity measures that had been brokered by Greek politicians and Eurozone finance ministers on the 9th of February. Greece faces a hard struggle as it attempts to deflate its economy in line with measures imposed by Brussels. However, despite near cross-party support for the €130 billion deal, widespread rioting hit the capital Athens as tens of thousands of protesters showed the world what it thought of the latest episode in this never-ending bailout saga. This week has for the first time seen senior figures within Europe hinting that a Greek exit from the Eurozone may now be a viable option. Germany's finance minister, Wolfgang Schäuble, described the former as a bottomless pit, which inevitably stoked the flames of the riot and caused the normally passive Greek president to react and declare, "Who is he to insult Greece?" The general prognosis on whether a deal would happen is unlikely to be known till next Monday at the earliest, but positive signs did start to come out of Greece late on Thursday, as they appear to find the extra €325 million saving it would need to satisfy the EU and IMF. In response, the Dow Jones Eurostoxx 50 rallied up 2% from the low it hit at midday. This rhetoric unsettled markets on what has been a mixed week for economic data. UK inflation figures showed a large fall on Tuesday, as the impact of last year's VAT rise fell out of the calculations. CPI now stands at 3.6%, which, although still above the 2% target, led the Bank of England Governor Mervyn King to declare that the squeeze on household incomes was starting to recede. Mr King appeared more bullish on the British economy in the medium to long term, suggesting that the extra £50 billion of quantitative easing analysts have been expecting in the summer may not now be a dead cert. This and the uncertainty in Greece led sterling to make some gains against the euro, moving to below the 8,300 mark on Thursday morning. However, these gains were limited against the dollar as investors jumped into the safe haven currency and out of riskier assets. Sterling hit a 3-week low on Tuesday of 156.70 as it continues its long-term trending pattern between 154 and 158. Mr King also warned that GDP figures would be a little distorted in 2012 due to the impact of the extra bank holiday scheduled for the Diamond Jubilee in June. UK unemployment figures on Wednesday displayed a mixed picture. The rate of those seeking job seekers allowance has started to recede, coming off a record high late last year. However, youth unemployment is still setting new records, with unemployment in the 16 to 24 bracket now at 22.2%. More positively, retail sales figures early on Friday morning showed a surprise jump in volumes. They had been expected to come in at negative 0.4% month on month and up 5.5% on the year, but were actually shown to have been up 0.9% on the month and 2% for the year. The Office of National Statistics said stores had lured consumers in with bargain deals on household goods and furniture. The figures will add weight to Prime Minister David Cameron's argument that the economy may be starting to turn around after contracting at the end of 2011. However, Mr Cameron may not be as happy with the rating agency Moody's, as Tuesday saw them put the UK's AAA credit rating on negative watch. They also downgraded several other Eurozone countries, including Italy, Spain and Portugal, as well as putting France and Austria on watch along with the UK. This decision added fuel to the public spending debate already alive in British politics. Maintaining low borrowing costs has been one of the main justifications for the Conservative Party's deep austerity cuts. Moody's said that although the UK was not in the Eurozone, its deep connectivity and strong trade links with the bloc meant that any further abrupt fiscal deterioration would call into question the government's ability to rectify the debt burden by 2016. A negative watch means there is roughly a 30% chance of a downgrade. Across the pond, the US economy has continued its revival this week, with core retail sales figures showing a slight improvement on Tuesday, and weekly jobless claims down on Thursday. The S&P 500 was up 10 points since last Friday at the close on Thursday evening, this despite the uncertainty in Europe. In corporate news, Apple continued its unstoppable surge to above the $500 level on Monday. There were also rumours that Facebook's impending IPO may make 1,000 new millionaires, and Dow constituent 3M is seen likely to inject $1 billion as it looks to top up its underfunded retirement plans. Next week will start quiet as Monday sees the US celebrate President's Day with only a half trading day in session on Monday. Later in the week, existing home sales figures are to be released on Wednesday and University of Michigan consumer sentiment on Friday. Back in the UK, equities had a balanced week as investors digested the good economic data against the uncertainty seen in Greece. Monday saw Vodafone announce it was considering a bid for troubled telco, cable and wireless worldwide. The latter had fallen nearly 75% in the last year to around 20% before the bid was announced, and could be seen as a well-valued target for the British giant. Xstrata shareholders appear to be pushing for more out of the deal with Glencore. This follows sentiment expressed last week by Standard Life, one of its biggest shareholders, that the deal severely undervalues Xstrata's assets. The current offer from Glencore would give roughly 2.8 shares for every one held in Xstrata. However, many analysts are betting this could go well above 3. Elsewhere, AIM-listed stock Excite Energy was up 73% from Friday's close by the end of business Thursday. Gulf Keystone started the week in the same fashion it has for most of the year, as it surged past £4. And bank stocks traded well on Friday morning, as investors bet that the Greek bailout would be concluded by Monday. Barclays went back above £2.50 for the first time in 7 months. Next week sees a string of FTSE 100 constituents reporting, including RBS, British American Tobacco, Capita Group, RSA Insurance Group and Centrica on Thursday, as well as Lloyds Banking Group on Friday.